Hey guys, my name is Colin and this is Colin Talks Crypto. We're going to talk about the Bitcoin bull run and where I see us in this cycle. We may also touch upon things like Terra, Luna, Bitcoin call options for mining stocks, Ethereum, my St. Kitts application for a second citizenship. All right guys, so Bitcoin is sitting at an exciting $46,500 as of today. It's been climbing for the past 3 weeks. It looks like the bottom is in at about 29,000 and we've basically just gone up since then. Now, as with any market, it's going to go up, it's going to go down, but I think the general direction from this point forward is up to a new all-time high, contrary to what some others in the crypto space think. Some people think that this is a bull trap and we're going to go down to $10,000. I don't think that's the case. And I base that opinion on all the metrics of the CBBI. Go to cbbi.info. That's the Colin Talks Crypto Bitcoin Bull Run Index. Right now it's sitting at a score of 59 out of an approximate 100, which would indicate where we think the peak will be. It could be a little higher, could be a little lower, but 100 is the target for the peak. And right now we're at 59. So that goes to show you that we have a ways to go. Remember, we hit about 76 or 77 when Bitcoin was at $64,000, and that was still not quite all the way to 100. A bit of a far cry, really, from 100. And if you look at the metrics, basically 9 out of 11 of them are very clearly indicating we are not yet at the top. 2 of them are ambiguous. They could go either way. They could say we were at the top at $64,000 or it was a sub-peak of a double top scenario, kind of like we saw back in 2013. I think that this year is shaping up very much like 2013 with a double peak scenario where we had $64,000 just getting us going, and we will see over $100,000, as high as $300,000. That's been my prediction for a very long time, and I'm sticking with it. I think that we're not there yet. And so, of course, only time will tell. None of this is financial advice. I had a guy on Twitter say, you said it was going to $26,000 to $24,000, and you were wrong, and I lost money on that. Well, you know what? First of all, be responsible for your own trades. I never promised anything. I'm always very careful with my price predictions. I don't promise it's going anywhere. No one knows for sure. If anyone told you they know for sure, they're lying to you. If I said, I know for a fact it's going to $87,000 this bull run, I'm lying to you because I don't know that. It's impossible to know that. So keep that in mind. Be responsible for your own trades. Do your own due diligence. I'm just sharing with you my viewpoint as always. I really find that surprising when someone comes on Twitter and says, you said this was happening and I lost money, you were wrong. Like, grow up. Like, what are you, 13 years old? Are you in charge of your own life, or are you blaming everyone else for the situation that you're in? So anyways, I just found that kind of surprising. Now, even the targets I set, 100,000 to 300,000, keep in mind, I'm saying I think that that's likely. I think that's where it's going. I do not know for sure. It could go to 400,000 for all I know. It might fall short of 100,000, but I think it's going from 100,000 to $300,000 in this Bitcoin bull run. And I've been saying that for a very long time. Now, the reason I think that some of the crypto space may get this Bitcoin bull run wrong and call $64,000 as the top is because of the characteristic of the bull run cycle. This tends to happen every time the price goes parabolic. It happened like 2 years ago when the price started going parabolic after it had dropped down to 3,000. And some people were thinking that was it, that was the bull run, we were in it. And we were so far from it because really it's a 4-year cycle. And as I've said before, I strongly believe that at least in the early stages of Bitcoin's price movements, in the first couple of decades for sure, the Bitcoin bull runs are predominantly the byproduct of the Bitcoin halving event. And in fact, I feel that that is almost like a cheat sheet. The Bitcoin halving event, reducing the supply issuance rate of Bitcoin by 50% every 4 years, is an incredible supply shock to the system. And there's a bit of a delay, usually 1 to 3 months before the uptick begins. And basically it never looks back from that point forward. And so that's precisely what we've seen this bull run, and that's precisely what we saw last bull run and the bull run before that. The halving event cuts the issuance of supply in a way that sort of strangles the miners, because they have to start selling reserves because they're effectively making half of what they were before. The price doesn't immediately double, so they're actually making half the profit. And so what they try to do is make it through that entire bear market by selling reserves and hoping to come out on top. And if the miners have low enough electricity costs and they have enough reserves on hand, then they will come out the other side all the way to the next bull run. Those miners that don't have enough reserves, have too high of electricity costs, have too much debt, they can't keep their operations going throughout the bear market, they have to shut down operations, sell their equipment, and they're out of the game. And that's the nature, that's the evolution of Bitcoin mining. The ever-increasing search for lower electricity costs and more efficient mining hardware for cheaper and cooler regions, or better cooling methods like liquid cooling. This is the Bitcoin miner game. So anyways, that's the nature of this. And every time we see one of these parabolic moves upward, even if it's not the actual Bitcoin bull run, people get really excited and think that it could be the start of the bull run. And I understand, because it's very exciting and it goes vertical. And so we just saw that again recently when the Bitcoin price went from like $9,000 all the way to $64,000. Now that's a pretty good run, right? But keep in mind, that's only 3x of the previous Bitcoin all-time high. We had $20,000 in 2017, we had $64,000. That's like 3.1x. If you look at the previous Bitcoin bull runs, we had a 17x and a 30x, respectively. We had huge multipliers, and it's not to say that we're always going to see that same level of amplitude between peaks, from peak to peak. We're not always going to see a 30x or a 17x, but are we really only going to see a 3.1x? And this is the point I've made in many of my videos. I won't belabor this point too much, but the people who think that $64,000 is the top, I think are just not looking at a big enough picture here. And this is one of the big clinchers for why I'm saying that $64,000 is likely not the final Bitcoin bull run peak. It's because 3.1x is a far cry. If it was 6x, I might believe it a little more. Then at least we'd be at like $120,000. That's a lot more believable. An 8x or a 10x I think is much more likely. That's like 160,000, 200,000. Somewhere in that ballpark I think is much more likely than $64,000. Keep in mind, this is just probabilities. You know, there is a percentage chance that we did see the peak. I don't think it's very high. And in past videos, I've given you about a 10% odds that we actually did see the peak at $64,000. I think 90% odds says we did not see the peak. And there's a lot of factors that play into me saying that. It's basically the aggregate of all the 11 different CBBI metrics. But to name a couple of them, you know, you even take the Plan B stock to flow chart or the 51-49% golden ratio, and these are time-based metrics essentially. But what those two metrics actually really just boil down to is the Bitcoin halving event. The Bitcoin halving event is every 4 years, and that is what produces the golden 51-49% ratio and the stock to flow chart. The stock to flow chart is just a fancy way of describing the Bitcoin halving event. That's all it is. It's a fancy way of laying out the issuance rate and how it decreases every 4 years, and you get this pretty chart with some colored dots on it. It's literally just the Bitcoin halving event prettied up and put in a fancy format. That's really all it is. And so if you take this Bitcoin halving event time factor, we've only been about 3 or a little more than 3 years into the current Bitcoin price cycle. So if $64,000 was the peak, we just undercut it by at least 6 months. About 6 months, really. It would be 3.5 years for the cycle. It's possible, but I don't think that it's likely when you take a look at every other factor like I've just mentioned, like the 3.1x instead of maybe an 8x or a 10x or something of that nature, and the 4-year cycle, and so on. And all of these 11 different CBBI metrics really paint the same picture, a 90% odds, in my opinion, that we're not yet at the Bitcoin bull run peak. And so I'm holding on strong. I'm really glad that I did. I'm glad that I didn't sell at the bottom. I did buy some Bitcoin call options, and let's talk about that for a bit. So there are Bitcoin mining stocks, and I've covered this in one previous video, and I'm going to give you an update on this. And some of these Bitcoin mining stocks, they basically follow the price of Bitcoin because they're Bitcoin mining stocks and they're heavily correlated to the price of Bitcoin. If Bitcoin drops 10,000, they drop enormously. In fact, they drop more than Bitcoin does on a percentage basis. So let's say that Bitcoin drops by like 5% in a day. Well, the Bitcoin mining stocks might drop 20% in a day. It's really that amplified in its correlation. But likewise, if Bitcoin climbs 5% in a day, you might see these Bitcoin mining stocks climb 10 or 20% in a given day. So you can see that with a heavily volatile asset such as Bitcoin's already extremely volatile, you can actually sort of leverage it by placing your bet on a Bitcoin mining stock, which is correlated exactly to the Bitcoin price almost, and amplified. It's like an amplified leverage bet on the Bitcoin price. Now that's pretty interesting in itself, but another factor is that you can place a call option, which is basically you stating that you're confident that the price of this Bitcoin mining stock, which is correlated to Bitcoin but highly amplified, is going to be above a certain price by a certain expiration date, and you're putting money on the line. You're saying, I'm basically betting that it's going to be above this price by this date, and if it is, I'm going to get like a huge multiple. It might be 10x, it might be 20x, it might be 40x, depending on how cheap you bought that call options contract for. And I've been playing this game, and I've loaded up, and currently about 25% of my entire portfolio is placed in Bitcoin mining call options. Bitcoin mining stocks with call options. So it's like several orders of magnitude leveraged. And I really feel that that's smart based on what I just told you earlier. And I'm not recommending you do this, and this is not financial advice, just in case any of you get this misconstrued, like that Twitter guy at the beginning. I'm not saying you should do this. I'm just telling you what I have done. And it's because, like I said, I believe there's a 90% chance we have not yet seen the full and final peak of this Bitcoin bull run cycle. And so if I think that there's a 90% odds we have not yet seen the peak, why would I not at least leverage a portion of my portfolio heavily in that direction? So that if I'm right, that 90% chance that I think I'll be right, I'll 20x that 25%. That 25% of my portfolio will effectively become more valuable, most likely, than my entire cryptocurrency portfolio. And that's the bet that I have placed. And I was loading up on that during this kind of bear market correction. Not really a bear market, just a correction from 64,000 down to 29,000. I was loading up on these Bitcoin mining stock call options. And I'm happy with where I'm at right now. I've got a nice sizable investment there, and so I will keep you guys informed, but that's what I've been doing. And do your research before you even venture into doing something like that, because first of all, we're not at the bottom anymore, and they've shot up quite a bit. I do think they'll go up quite a bit more, but know what you're doing, because if you're wrong, you will lose all of your money. Call options are sort of a binary investment, at least when it comes to that expiration date. Like, you either meet your target price or you don't, and if you don't, you lose all the money you put into those call options. So if you take 10 grand and you bet that Bitcoin's going to $100,000 and you're wrong, and you have to say by January, by March, by whatever date, let's say you're wrong, you lose the 10 grand. But if you're right, you might make $150,000 or $100,000. So there's a lot of upside, but there's a lot of downside. But I would say the upside is actually better than the downside, because the furthest down you can go is zero. This is not shorting the market in which you can have unlimited downside. I personally do not believe in doing that. I don't believe that one should ever put themselves at the mercy of going infinitely into the negative, because that could just utterly devastate one. But if you have a percentage of your portfolio, a percentage you're willing to lose, say it's $10,000, and you go, you know, if that went to zero, that wouldn't break my life. That wouldn't ruin me. I'd still be able to pay my rent. I'd still have a nice sizable crypto portfolio over here. Well, then it's a bet you can make at your own discretion, because the lowest you can go is zero. And the highest you can go is really as high as the Bitcoin bull run, amplified by the mining stock, amplified by the call option, can bring you. And so that's what I've done, and I'm pretty excited about that. All right, so let's talk about a few other things. I'm just kind of shooting this from the hip here. Some news recently. The Ethereum hard fork went off successfully, the London hard fork, but it's super exciting to see 25% of every transaction fee being burned. This translates into millions and millions of dollars that have already been burned. I think that Ethereum is going to hit $10,000 to $20,000 in this particular crypto bull run cycle. And so if you take all the burned ETH, that 25% of every transaction fee, times the price of Ethereum, which could be $10,000, you end up with like hundreds of millions of dollars of burned ETH. And some people, I think mostly Bitcoin maximalists, like to point out, they really love this point. They go, well, there's no hard cap for Ethereum. You know, it's infinite supply. And they just love harping on that point. And here's a little more information. While the recent London hard fork upgrade, including EIP 1559, does dramatically reduce inflation on Ethereum, Ethereum will not become deflationary yet. Ethereum will have a net inflation rate of 1.2 to 2.6%. Under moments of intense network usage and higher fees, the inflation rate can reach the lower end of that percentage and may drop below Bitcoin's inflation level of 1.85%. However, when Ethereum switches over to staking via proof of stake with Ethereum 2.0, its inflation rate could hit -1%, thereby making it deflationary. Keep in mind that Ethereum can do basically an infinity number of things that Bitcoin can't because it's programmable, and with a programmable platform you can do anything. Bitcoin is basically money transference and not a whole lot more. It's not really able to do a lot more than remit value, and actually you have to be kind of a high amount of value because of the fees. So Ethereum, even though its fees aren't low, can do an infinity of things that Bitcoin cannot do. So often I think that Bitcoin maximalists are hating on Ethereum because they fear it, and they see that it is growing, and they see that the amount of wrapped Bitcoin on Ethereum far exceeds the amount of Bitcoin, for example, in the Lightning Network. Just to show you some examples of, failure to scale. Ethereum is scaling Bitcoin better for Bitcoin than the Bitcoin Lightning Network is scaling Bitcoin, if that doesn't paint a picture for you. And so sure, Bitcoin does have a fixed max supply, and that is awesome, and I do hold some Bitcoin. I'm not even a hater against Bitcoin, but I'm realistic about it. And if you're going to be realistic about it, you also know that Bitcoin won't hit its final Satoshi issued on the network for 120 more years, basically. There's like 130 total years of inflation. Bitcoin is not deflationary. Bitcoin is inflating. Ethereum is inflating. They're both inflating. So it's kind of silly to point fingers at one and say that one has a fixed supply and the other doesn't, when they both have a similar inflation rate and they're both inflating for at least another 130 years. And for all we know, Ethereum may end up being deflationary. So I love Bitcoin for what it is. I love Ethereum even more for what it is. I do realistically think that we could see a flippening at some year in the future. Could be this year, could be in the next 4 years, where Ethereum's market cap is greater than Bitcoin's. Probably temporary at first, and if it happens once, I can almost guarantee you it will reflippen again later, and it will never look back. And I think that that is a realistic possibility. Okay guys, so let's talk about my St. Kitts citizenship. So I have done the process for that. It's a second citizenship, a second passport. It gives me flexibility. It gives me more countries that I can travel to in the future. And it just gives me a backup plan, to be frank. If you look at all the craziness, like, tax hikes from Biden up to 40% for short-term capital gains, or this recent infrastructure funding bill getting pushed through the government of the United States, whereby it's going to overly burden almost every miner and every entity involved in the crypto space with just an almost impossible level of paperwork and administration. And it really just goes to show you that the United States government, while they won't necessarily ban crypto outright, they will throw enough sand in the wheels to utterly make it impractical, or to make it so costly and expensive that it just pushes innovation elsewhere. And so I'm having the St. Kitts second citizenship as a backup plan because I really don't like what I see, and I really only seeing it getting worse. But to speak frankly, with how the election's been handled recently, with how the COVID pandemic's being handled recently, and with how this bill is being handled recently, I really am not impressed with how this country is handling basically everything. And so if you're wondering why I've done this, that is exactly why. I just don't feel safe here. I don't feel safe where I'm at. Even in Puerto Rico, like, the restrictions are utterly ridiculous, utterly ludicrous, insane actually. And so in the same way I might purchase insurance for my house or for my car or for anything else, I view a second passport as insurance for my life and for my lifestyle and for where I live. yourself. And I encourage you to evaluate that for yourself as well. There are many options in the Caribbean. I recommend, if you are interested, reach out to Jennifer Harding Marlin at JH Marlin Law. I might have that wrong, but you can look her up. I'll put the link in my description below and reach out to her. She's super friendly, super easy to work with. You can literally contact her anytime, day or night. She gets back to you right away, and she can help you get started on what works best for you, as far as whether it's St. Kitts and Nevis or any other island in the Caribbean, because there are less expensive options, there are different options, because not everything is a one-fit-all solution. All right, I think this video is about long enough. The last thing I'll talk about is Luna, the Terra blockchain with the Luna token, and why I'm so excited about it. You know, it's kind of funny because I don't talk about Luna that much, at least in YouTube. I talk about it a lot on Twitter. If you're not already following me on Twitter, follow me at Colin T Crypto. And I actually update a lot more frequently on Twitter, and very often I make videos out of content I share already on Twitter, so it can be the first place you hear of ideas that I have or things that I talk about. But I recommend you follow me on YouTube and on Twitter if you want to get the full picture. I also have a Facebook profile, but really that's just a duplicate of what I post on Twitter. So Twitter and YouTube are the two best places to follow me. So I'm going to spend a few moments here just kind of educating you on the Terra Luna blockchain and why I'm invested in it. And you know, it's 20% of my portfolio. It's no small piece of pie, and it's actually grown tremendously. I remember when there was a point where EOS and Luna were at parity. They were $4 each or $5 each or $6 each, somewhere in that range, at parity. There was even a point where Luna was cheaper than EOS. And I wish, had I gone back in time, hindsight is 2020, of course, I had traded 100% of my EOS for Luna at that moment, because right now EOS is $4.60 and Luna is $17 or $16, something insane like that. Luna has just been on an utter tear, and it just hasn't stopped. And I don't anticipate that it will stop for certain supply dynamics in relation to the stablecoin of UST. So real briefly, the Terra blockchain is underpinned by its base currency, the Luna token. So if you're ever wondering why they're not the same name, it's just because there's a Terra blockchain and there's a Luna token. But there's also the UST stable token. And it's really interesting because much like the Maker DAO system, where you have the Maker token, you have DAI, and you have Ethereum, well, here you have the Luna token and the UST token, and they interplay to regulate the supply of each. So really, the Luna token takes the shocks and impacts of the price volatility for the UST token. And it does it in such a way that every time UST is burned, there's less UST in supply, more Luna gets issued, and that drops the price of the Luna token because there's more supply of Luna. But on the converse, every time more UST is minted, that means that Luna is effectively burned and taken out of commission. So then the Luna supply is dropping. And I recently did a tweet on all the different things that are coming down the pipeline for the Terra blockchain with the Luna token, and it is utterly tremendous. There's a huge network protocol upgrade coming soon called Columbus 5, which is going to add a bunch of features and functionality, not the least of which is inter-blockchain communication, which then allows the UST stable token to be cross-chain with other platforms such as Solana. And guess what that does? That puts increased demand on the UST stable token. And what does that do? That decreases the supply of Luna because, as I just said, every time UST is minted, Luna is burned. And there's a list of 10 different projects and 10 different things coming that are all going to be using UST more. Not to mention the fact that the UST total market cap is a small percentage of USDC or DAI or USDT, and yet it is superior in my opinion every way, because UST, the Terra US dollar stable token, is a true algorithmic stable token. And you might be thinking to yourself, well, isn't DAI token a true algorithmic stable token on the Ethereum blockchain? And the answer is not exactly. I would say only partially, because unfortunately they've made about 50% of the collateral that backs the DAI token USDC. So really, DAI token is half funded by USDC, and USDC is Coinbase's stable token, which is completely and 100% centralized. So the DAI stable token really isn't a fully decentralized stable token. And the fact that it's 50% or more centralized, I would say arguably makes it not decentralized at all. The point is that UST is 100% fully decentralized and algorithmic as a stable token. It is the most advanced and best stable token I've seen on the market yet. And it's where I'm probably going to park a good chunk of my cash during this crypto bull run peak that we're coming up to when I cash out. So those are just a couple of the reasons why I'm so bullish on the Luna blockchain. And there are huge airdrops. I mean, I'm getting massive airdrops every single week. It's what the EOS blockchain originally promised, but Luna is doing it in every way. Luna's block times are super fast. It's proof of stake. It's got a ton of projects building on it. It's interoperable with other blockchains. Its user experience is awesome. The wallets that are produced are beautiful, seamless, no problems. It can connect with your ledger directly. It's one of the best user experiences I've seen. It's beautiful DEXs built right into the wallets, the Columbus 5 upgrade, the 10 different projects or more that are coming to it soon, the massive number of airdrops, the fact that minting UST burns Luna. I mean, I'm actually at a loss of words for all the good things I can say about the Terra blockchain and the Luna token, and that is why it makes up 20% of my portfolio. So I hope I gave you guys a good crash course understanding of why it does make up such a significant portion of my portfolio, because I don't cover it in a lot of YouTube videos, and I probably should. And to be honest, I can see the price of Luna going up tremendously from this point forward. I would not be surprised if we see a triple digit or maybe quadruple digit Luna token price by the end of this bull run. I personally believe that a $100 to $200 Luna token price is extremely reasonable for this particular Bitcoin bull run. And it's possible, like I said, with the massive adoption and potential upside of the UST stable token, that an enormous amount of Luna could be burned. And we could just see a parabolic run up unlike anything we've ever seen. We could see a $500 Luna. I'm not putting that out of the realm of possibility. So guys, I hope that you enjoyed this video. We covered so many different topics. If you wouldn't mind, please share this video. Please smash, pound, like, gently tap, whatever your preferred method of hitting the like button is, and I'll talk to you again soon.